Hey, what's going on, everybody? This is DJ the Money Coach. I'm sitting here in the middle of the Chicago highway. Look at this. Columbus Drive, the Buckingham Fountain, the skyline. It's amazing. The Prudential Building, the John Hancock Building, the Sears Tower, the Americana Congress Hotel, Columbia. Hey, you can only do this if you're free. That's right. And how do you get free? 4 dirty little words: discipline, accountability, plug into a system, go to work. 3 years to 5 years, you can be consumer debt free, 800 credit score, 6-figure passive income, and a 7-figure net worth if you're willing to do the work. And most importantly, you can keep it all. But you gotta plug in the system to be 100% you and get that pom-pom lifestyle. That's plenty of money, peace of mind. Come join us on the Beaches of the World Club. I'm DJ the Money Coach. I'll see you in the next webinar. Get free.
All right. What's going on, everybody? Welcome to another episode of Nick's Knowledge and Notions in Cube Science Series, brought to you by 7 Spheres of Money. And before we get started, go ahead and like this video, share it with everyone you know, and help us reach 1,000 subscribers by subscribing to this channel that you're watching right now, the 7 Spheres of Money. So it's if you're watching us live, it is Friday night, so how's everybody out there doing tonight? Good evening, Adele. Good evening to you. And what's up, DJ?
What's going on?
Everything is everything.
Night is the night, baby.
Yep.
Cracking.
Yep. Yeah. So we can go ahead and get into it, because this show and this topic is actually a part 2 to where we left off last night on Bet on Black. The men, the family, and the legacy. We were talking about mental health and friendship and all of the psychological experiments and games that are being played on the world, on the world's population, and how it's leading to mental illness, mental disorders, and how those positive friendships play a role in helping us free ourselves mentally, and how that financial freedom helps to exacerbate that process. And at the end, towards the end of the show, DJ mentioned these new Irs tax laws that will be coming at the beginning of next year. So in case you haven't heard on the news, the threshold, for reporting transactions, revenue transactions on these cash apps, such as PayPal, Venmo, Zelle. The threshold is it's $20,000, and starting January 1st, it would be changing to a whopping $600. That the IRS wants to keep track of, in terms of your business transactions. So this is for businesses. Not personal accounts, not personal transactions, but business transactions. So there's political implications that come along with this change, and then on the business side, there's information that you entrepreneurs out there need to know and need to prepare for, because we already know a lot of folks out there that have businesses, they don't have accountants. A lot of them are doing cash transactions, without properly, reporting and filing their revenues and transactions. So a lot of the basics that businesses should need, they're already missing. And then this new change that's going to go into effect on January 1st will make it even more important to be aware of the tax laws and have your business set up properly, as DJ and some of our guests reiterate and talk about on a constant basis on this platform. So that's what we're going to get into tonight. For this show, I will be lobbing it off the backboard to DJ for this one, since he is the financial expert. But I thought this was something that's important, since entrepreneurship is the trend nowadays, and I've noticed that a lot of people are doing business with cash and using these programs and these apps to do business. So, DJ, what's your thoughts on this? What are the implications of this new change that's coming down the pipe?
I don't know if it's necessarily implications, Nick. This is no different than when you weren't taxed on the internet. So if you remember when commerce first started, become a little robust on the internet, most of those transactions were tax-free. So we live in a society that the only way for the elite and the government to exist is for them to tax the hell out of you. So that's really what you're seeing right now today. This was already coming down the pipeline. You just weren't paying attention. Not saying you personally, but you generically speaking. So the invention of all these different cash apps to try to, avoid and hide, you can't outrun the government. Okay. Only way you can outrun the government is you have lobbyists who can continue to stay above the government and dictate the government how they want them to play the game. And that's what you're seeing with the fintech companies. The fintech companies are actually now dictating to the government how they want politics and policy to be run in this country. So with that said, this is basically going back to the fundamentals of running real businesses. So if you now are the quintessential entrepreneur and you don't have your ABCs of wealth kit or your 7 spheres of money kit, which is what you should start with before you even begin a business. And again, I'm going to date myself, but when you first started a conventional business, you had to have, an accountant, primarily a CPA. You had to have an HR person. You had to have a bookkeeper. You had to have an, enterprise system. You had to have a marketing system. You had to have a sales system. You had to have operations. But in this world we live in now, where you basically have solopreneurs, not really people that run in businesses, they're really running hustles. So they'll go read a quick book, they'll go online and do a quick query, and then they'll go ahead and pop open, their LLC, and really don't know what the hell they're doing. But since it was so easy for them to get an LLC, they're running the LLC. Here's the reality, is that the LLC becomes less powerful in this time and age because of the tax law changes. It's actually going to be more advantageous for you to have the proper structure like a Fortune 1000 company, to have a structure like a C Corp or S Corp, depending on how you are filing your taxes personally from your business. So you're seeing now the flexibility is that you can actually convert these. And it used to be by default, if you filed and got incorporated by default, your company was a corporation, not an S Corp. It was a corporation, but you can actually by default have it as a corporation because the tax laws favor the business entity, not the individual, and the avoidance of double taxation. So what you're seeing now is that what these people need to be aware of, and they should be on point with their QuickBooks systems, their Peachtree systems, And when I say this, I mean, if you're making revenues of 100,000 plus and you want to legally avoid, FICA, Social Security taxes, things of that nature, and not get double taxed, you need to have the proper entity structure. And that proper entity structure may not be an LLC. Now, if you're not planning to make over $100,000 in revenue, then it really doesn't matter. But what does matter now is now that they're tracking down to your apps, these cash apps, transactions of $600 or more, you're not going to be able to hide the tax money that you owe the government anymore. And even on those apps, they eventually find you. So what you need to know is that there's still a threshold. Well, when you start an entity or a business, the government affords you 3 years to get all your ducks in a row. And you also have to look at this from an offensive standpoint. The tax codes are written for business owners. They're not written to penalize business owners. Only reason why you get penalized is when you are operating as an individual with a facade of a business is when you get penalized. And when you drop into the alternative minimum income tax bracket. So for instance, if you are a legitimate small business right now, then here's some of the things, and I always say this, every year you should get the new update in the tax codes. You should get that book that the IRS produces that comes out every year about this time. It tells you what the new minor changes are in the tax laws. And it's the same thing if you're following sports. If you know in sports, in the NFL, the MLB, and the NFL and the NBA, every year they are modifying existing rules because they're outdated. And then they will try some new stuff for a trial period to see if it really works, because it's coming down the turnpike in the future because the changes and advances in technology are moving so fast, the government can't keep up. So what you're really seeing now is something that was in play 5 years ago. So when these new CAS apps and stuff came out and they were ahead of the government is just catching up. That's all. This is not something that you may look at administratively wise. Yes, the Biden administration is pushing it more because the only way they're going to keep their pockets fat and their people is to tax the hell out of people. So they're just speeding up something that was coming anyway, regardless of what administration. The Republicans want a small government that has more tax advantages for the more wealthier people, but they still tax the hell out of the little guy. They don't tax the poor because the poor don't have any taxable assets. They tax the middle class. And that's why the alternative middle income tax came about maybe about 12, 13 years ago. So if you had a household income of about 150 to 200,000, that alternative middle income tax became a new tax bracket where you put you in what they call this donut, and you're getting taxed out of the wazoo if you don't have some type of business or real estate investment property. So now when you look at it, the new tax laws that are going to start just modifications for small business. So starting January 1st of 2022, the 21% corporate tax that Trump brought to us, which was a godsend for corporations, C corporations, things of that nature, now is going to be accelerated to 18% tax on the net income, on your NOI, from 400,000, and then you're going to pay 21% on your NOI from anything up to $5 million, and anything above that, you're going to pay 26%. So mind you, prior to the Trump administration, corporate tax was already like 31, 33%, something in that area, which was the highest in the whole world. And then we brought it down by 10 points, which was a break for real small business. It's in the definition of a small business, generally is a business that's running between $500,000 to $5 million a year. So all of these people out here on these platforms that are claiming to be businessmen and they don't have employees, they're not running a business. They're just running a hustle. And when you have your LLC and you're the managing member or the member of the LLC and you're taking one bracket to file, more tax write-offs which the LLC gives you the advantage of doing versus taking, the revenue. All that's now doing is being brought to the light and say, hey, if you don't have your shit together, you're going to be messed up real fast. So here's the great thing is, number one, I'm going to get myself a bookkeeping system. QuickBooks, Peachtree, something of that nature. Number two, I'm going to stop doing my own taxes. I'm going to now start. You used to didn't have to have a relationship with a CPA, to be honest with you. Even if you were a high income earner making, $100,000 to $150,000 a year, there was no really legitimate tax advantages outside of you having real estate that a CPA would even be worth you investing in. But now, because of the advent of these cash apps and more people becoming entrepreneurs and trying to finagle and massage these entities that they really don't know how to truly work them, and they're going on YouTube and IG and they're getting this tax advice from people who have no vested interest in your business. And here's what I always say. If they don't get burned from me getting burned, I don't invest with. Show me your credentials. Show me your clients. Yeah, I can read the tax codes and be a, what they call it, autodactic or whatever, somebody who's self-taught. Forgot what the exact word is. And I can expound to the cows come home how these tax laws work. But another thing is when I actually apply them and I'm actually doing the tax returns and I'm actually doing audits and getting zero penalties from the audits, it's two different stories. So right now, if you're setting up your own LLC and you think you're a master and you have revenues coming in the door, $6, $7, $8, $9, $10, $12, $15,000 a month, I would tell you right now, I would call up a CPA that is a small business CPA. If you're working a small business, if you're looking for real estate, I would contact a real estate CPA or a real estate tax attorney and ask them to explain to you what the tax laws are in accordance to what you're actually doing. Then I would take my client relationship management, software, and then I would migrate that into my accounting system. Yet again, some type of bookkeeping system, QuickBooks, Peachtree, Intuit type services. And then I would just sit down and be transparent, because here's what is going to happen. The IRS is going to find those mistakes that you're making, and what they're not going to do, they're not going to come knocking on your door immediately, because there's no profit for them to gain catching it when you just made the mistake literally today. They're going to come knocking at your door when you've been doing it for 3-4 years in a row, and now they can assess some massive penalties. But again, don't panic, because if you just started your enterprise this year or last year, they give you 3 years to get your ducks in a row. And if you're really serious about making this your life, then you should invest in a good CPA, a good attorney, and a good financial planner. And I'm not saying this because we run the 7 spheres of money, which is specializing in accounting, insurance, banking, legal, estate planning, financial planning, and mortgages, but these just happen to be the facts. So I'm going to look at those tax laws and those changes and look at what are the advantages for me as a tax business structure-wise. That's going to be the most important thing. I'm going to look at how the tax laws benefit the business entity that I am operating. And then I'm going to have my team come together, sit around a table like an orchestra comes together and play out a beautiful symphony together. So I'm going to have my CPA talking to my financial planner. I'm going to have my financial planner, my CPA, talking to my attorney. And then we're going to project what our tax structure is, what our perceived liabilities are, but most importantly, what are our advantages with the new tax law? And are we using those and maximizing those tax laws? Am I going from the LLC structure to the S Corp in my personal taxes so I don't have to pay self-employment tax, Social Security tax, or FICA? And let the professional tell you. And then let the professional tell you if your structure is not properly, what you can do to amend it to get it properly structured. And most importantly, be transparent. Now, if you are an individual that's in a high tax bracket, because now the tax bracket is going from 37% to almost 39% again for personal taxes. It's crazy. So I'm going to look and say, okay, where can I leverage myself? And see, here's where doctors and lawyers used to do prior to the Tax Reform Act of 1987, 1986. When they had six-figure incomes, they used to just buy real estate and just let it get a lot of losses so they can write it off. But then when the Tax Reform Act of 1986 or 1987 changed, it said you can no longer take these phantom tax write-offs. They were caught. And that's really what you're starting to see right now. So right now, I'm going to have my structure properly. I'm going to have my contractor relationships properly. I'm going to make sure that I don't have contractors that I'm treating like employees, because if you are audited and you have contractor relationships with, they're really more employees, then you're going to get, taxed and fined on that as well. So right now, you should be taking an inventory. You shouldn't panic. You should take an inventory. Sit down again. The most key important word here is transparency with the professionals. And see, a lot of people in the community that we come from, they're not going to do that, because they're going to be, penny wise and dollar foolish, because they're going to try to spend and hoard as much money as they can without paying. Hey, they say, hey, man, give Caesar what is Caesar's. So I'm not going to be in a panic mode if I have a great accountant, if I have a great tax attorney, if I have a great financial planner. I'm going to be excited because they're going to show you more tax advantages in these new tax changes. Now, in regards to those apps, PayPal, Zelle, Cash App, whatever the other names of them are, then I'm just going to, add those all up. Again, with my proper structure, I'm probably going to have some legitimate write-offs that are ordinary and customary expenses in your business that you're operating in. And so that's why they have what's called SIC codes. SIC codes basically tell you every industry that you are doing business in or trying to do business in, what are the customary and ordinary write-offs that are feasible that pass the SNF code or the SNF test with the IRS. And again, your CPA, your tax attorney, your financial planner, they're going to be able to tell you what they are and how to line them up properly. Just like, for instance, if you want to buy a very expensive luxury car based on the gross vehicle weight, it could become 100% tax write-off if you've done it properly. But again, most of the people, Nick, are out here trying to get over. They're out here trying to purvey this image of they're extremely wealthy. But you know what? Wealth is not how much you can spend. It's how much you can actually accumulate and protect. So if anything, this should give you the mindset of putting a defensive strategy together so you can eliminate those tax write-offs. And then another thing you want to start looking at, if you, like I always tell people, in 3 years in any profession with serious, discipline, accountability, the right system in the work, you'll make 6 figures. In 3 years, you make 6 figures. What do you make in 6 years? You make double 6 figures. In 9 years, you make $1 million in revenue. So right now, at $1 million, you ought to be looking at an estate planning scenario. Now I hear you right now, oh, well, the estate tax laws don't even affect people until they make $5 million in revenue. Guess what? That's not a lot of money. But if you have the right defensive tax strategy that your professionals can line you up properly, and you're saving 10 to 15% versus giving up that 10, 15% in taxes, you can immediately amass $5 million worth of assets. Because what's happening right now, what's the reverse of superinflation, is that if you are in the seller's market, you're getting paid X plus more than you ever could get for anything right now. You look at anybody right now where just sometimes, man, it's just timing. If I'm selling my house right now, it's no better time to sell, even if I'm selling a piece of crap, because stuff is so overvaluated because we are in a deflationary mode before the superinflation, because the tax rates from the central bank were basically zero. So all of that free money is allowed people to get more stuff, and now it's got an accelerated value to it because now we're in inflationary. So now that house last year it was 100,000, today it's worth 120,000 because of the cost of everything. Okay, so if I'm right now and I'm exiting out my retirement plan, I'm excited. But conversely, if I'm in, I gotta buy, I'm not excited because the deals are far and few between. And that's across the board in everything. And again, if you already had a defensive plan in motion and you were proactive, you wouldn't be in a panic. But I can tell you, man, straight up, 90, 95% of the people out there that not running a business like a real corporation with CEOs, CFOs, CIOs, and they're running one-stop shops, they're the ones in trouble because they don't think about defensive strategy. They think about how much money can I get right now, and how much can I show people that I've succeeded in life, that I'm wealthy, I'm rich, I'm bald. But you look at it right now, man, just from January, rental cars have gone up 43%. These are national averages. Some places more, some places less. Gas prices, 42%. Now, I know that's not true because I'm in one of the cheapest states for gas. There's only 3 other states cheaper than Texas, gas-wise. Missouri, Arkansas. They're saying gas prices are only up 42% in 9 months. That's not even true. Gas in my neighborhood, literally in January 2021, was $1.39 for the least expensive gas. Right now, I just rolled out, got oil change. Gas was $3. On one side of the street, the other side, it was $2.89. That's not a 42% increase, bro. That's about 130%. Now, if I had projected what my revenues were in 2020, I already have a tax strategy in place for the gas increase. Here's another thing that you need to know. And most of y'all know this, but again, are you applying this? Do you sit down every 90 days with your team? No, you're not. You're not. Just stop the lying. You're not. Because know how I know? Because this is the job I do. Because every time I talk to a professional about, hey man, who's your CPA? Who's your attorney? Who's your financial planner? They have reactionary relationships with them. What does that mean? They only touch bases with them right around tax time. If they got a small business, the taxes would due October 15th. They didn't get an extension, whatever. They're talking to them right, red line. And guess what? If you got a great professional, they busy as hell. If you come across one that don't have, their phone ringing off the hook and they can't get with you, that's a sign you shouldn't be working with them. Because the great ones, they busy. But again, if I'm doing projections, just like if you're a shareholder, everybody out here got stock, everybody's a stock guru. You have an annual report that has to be put together for the shareholders and the stockholders to tell them everything that's going on in that company. You should be doing the same thing. Every 90 days, you should have a proactive relationship. Your accountant, your attorney, your financial planner should be sitting down and telling you, hey, here's the new tax changes. Here's the new legal changes. Here's the new estate laws that benefit you. If we put all three of these together, you'll have a beautiful concerto. All you got to do is apply what they tell you. But 9 out of 10 times, we don't believe them. 9 out of 10 times, we're like, man, oh man, this guy, this girl, she started $250 an hour. But that $250 an hour probably save you $5,000, $10,000. All those people on Patreon and all that, man, the government ain't getting. Hey, guess what? You will get big enough, because here's the deal. And I was wrong. It's actually now almost 11% of the people make $100,000 a year. So guess what? They got their eye on those people. So what you should do, and I'm guilty of this at times, is, you'll make more money than you think you'll make, and you're like, man, I don't want to pay that extra thing. But then you should just get it out the way, bite the bullet, put that money aside in a money market account, a liquid account that you can already pay the government. And if you did a great projection, you'll pay the least amount of taxes because you were pretty close to your projections. And your accountant, again, would have told you what tax brackets and how to maneuver these things legally, ethically, and positively for sure for you. And then those savings that they amass for you, you put them in the right financial retirement buckets. 401k, 457 deferred comp, 403b non-for-profits, 401a, and max those bad boys out. And then you use the advantage of two different vehicles: a self-employment pension plan for the individual up to a certain number of people that can give you up to, $56,000, I think it is. And then if you have more than 10 employees, 10 to 30 employees, you can get a KEO and actually go almost 3x of that. That's money you can take right back in control and line for line lower your gross adjustable taxes. And you literally, off $100,000, you could actually be pulling back into your own portfolio, Nick, $20,000 to $30,000 every year. Now imagine if you had that and you're getting a 7% return, which is you take 7 divided into 72, which is rule of 72. Every 10 years, that money will be doubling for you. Then you apply the cost basis, because you're going to pass that money on to your heirs before you pass away. You're going to exchange the asset to them to pay less in taxes and still control it. Now you got a great strategy working from every possible angle. And when the new adjustments to the tax, and this happens every year, only thing that we're seeing now is that Biden has just gone off the rails. He owes so much to the people who got him in office, the higher-ups, not the Negroes. Just like Obama had to push in the alphabet mafia agenda because he took all their money. Now he's got to pay those people back. In the form of paying them back, who's the most vulnerable? The middle class. So now he knows you don't have a plan, and he's going to force this in, and he's going to tax the hell out of you. The wealthy people already got the loopholes and got the puppet strings. The people that are getting the child tax credits and all that stuff, they don't make enough money for them to tax. Where's the backbone of America and most democratic societies? Middle class. So what you should be doing, if you're listening to this today, you should be doing a inventory, and you should be interviewing and having some professionals vet the professionals you work with. You're going to be in a reactionary relationship initially, but then get over to the side and play chess and get into a proactive relationship for 2023. So now I can look ahead and anticipate what the taxes are going to be and my vantage point, and then how I can leverage by growing the accumulation of my wealth and protecting. See, when you're first getting any type of significant income, you're in the accumulation phase. But then when you start accumulating so much, you're in the protection phase. And then you're in the phase of let's transfer this stuff tax-free as best as possible in the estate planning phase. But see, most people don't do that because, again, soon as I make 100,000, I make 250,000. What am I doing? I'm going buying $100,000 car. I'm buying a $500,000 house, and I'm showing all these videos with how successful I am. But then you don't pay attention to history. All you gotta do, man, is look at the entertainers and athletes. They'll be balling, and then they all got a story. I got a story. I've been audited before. 40 racks. Kevin Hart, Will Smith, Kareem Abdul-Jabbar. And I can name a whole bunch of people because they had the wrong accountants and they would just spin. And all of a sudden, Irs, got you, bend you over backwards. And I'm going to run up in you because you made the mistake and you didn't adhere to that threshold of them 3 years. And you didn't sit down and pay that person because you were, again, being penny foolish. I mean, penny foolish, and again, right now, man, if I'm you, I'm going to get excited and I'm going to say, I know, hey, it's one of the sayings that Denzel Washington said in American Gangster. You got to do what you have to do so you can do what you want to do. So when I look at these new laws that's coming out, you should have just been following the trends, man. Following the trends. Homeowners insurance. We're just talking to my good friend E. He was talking to another friend of mine. I said, hey, man, did you get your homeowner's policy? And again, it don't matter how astute you are. 20 years in the game, know how to find every little savings and app you possibly can. But some things you cannot stop. Homeowners insurance across the board in our community gone up 30-40%. And they're just getting a license to gouge people. But they're going to justify, oh, this has gone up. Labor has gone up. The workforce is constricted. So we got to charge you. Because what are the biggest buildings in the world? Financial and insurance buildings. Premiums. Based out, again, fear of something happening to you. And mandated that you have to have coverage. So they're bankrolling up because you are prepaying for something that may go wrong catastrophically. And then if it does happen, here's the irony of it. You pay your deductible and then they double your damn insurance premium. No win situation for you. Win-win for them. And then when they screw up, guess what? Our buddy Obama, he bails them out instead of letting capitalism run its course. Too big to fail. But it won't bail you and I out. But they say, hey, fool me once, shame on you. Fool me twice, shame on me. We've seen this video before. All you gotta do is go back to 2008. It's the same video. 2004 to 2007, prices was going through the roof. Everybody was making money, gobs of money. And then all of a sudden, we had a correction that we didn't anticipate. Some of us. I talk about it in my book. I anticipated that. 401ks and stuff dropped 40, 50, 70%. I was able to tap mine at like a 7% loss because I saw it coming. You know why I saw it coming, Nick? Because I studied the SNL scandal of the 80s. These things are cyclical. So all you're seeing right now is a video that's already played. Now, if you're too young to comprehend that, so if you were only like 10, 8, 9 years old in 2008, I can understand that. But if you were in your young 20s and you engaging in your first acquisition of a home or a car or a serious job, and you weren't paying attention, shame on you. So now, again, what do? First thing is, I don't panic. I take a deep breath. I take inventory of everything that I'm doing. And just like Alcoholics Anonymous says, hey man, first thing you got to do is look in that mirror and say, hey, I'm an alcoholic. So if I haven't done my taxes right and haven't done my planning right, I just got to look and say, hey, you know what? I made a mistake. How do I rectify this without pushing the panic button? And don't go run and hide. See, that's the normal thing that people do. They'll go, oh man, they're not going to find me. Guess what? They'll find you. So I would invest in some education, then invest in vetting those 3 relationships you got to have right now. And I talk about this all the time. Out of the 7 spheres of money, the 3 important relationships you got to have if you're a professional is relationship with your accountant, your attorney, and your financial planner. And have them sit down together. Because if you got $1, here's the thing. Most time we're thinking that those people are going to try to figure out how to spend each portion of your $1. That's normally the case. But if you get the right system, Nick, you can actually have them working together to help you make that dollar instead of taking that dollar from you. So you see some of these investment companies now where they're doing these competitive ads with all these unnecessary fees. And the guy's like, well, man, why are you charging me fees? And the other guy only charges me when we make money together. That's the model you should be in. So if I don't make you money, we don't make money together. But I do have to have you invest in the system, the experience, and the education of telling you how we do this, because we can't do free. I mean, we were just talking to one of our, big advocates and mentors to us. Was like, everybody wants free. Guess what? You can't go to the hospital and get free surgery. You can't go to the dentist and get free dental work. So why do you think you're going to get free tax advice, free financial plan advice? And if you are getting it free, what's the value of it? You want the Walmart service right now? Or you want the Neiman Marcus and the Nordstrom service? You want the Lexus service? Then I'm going to invest in that, because if I invest in those 3 professional relationships proactively and that person starts to see how I'm growing, they're going to be more in tune with your business. And they're going to make you more money than you invest with them for their professional services. So again, I'm going to take inventory. Then I'm going to find and look for those 3 professional relationships. And if I have the advantage point that I can actually have a system or a service to vet them, that they have the expertise, they have the resume, the proven track record, then I'm going to go with them to get my 3 professionals to work with in the 7 spheres of money. And then when I get them, I'm going to sit down, be transparent, be vulnerable, because here's the thing. If you counsel with me and you lie to me, I'm going to double that lie against you, because I'm going to give you doubly bad information based off the lie. And here's another thing for professionals who may be doctors and lawyers or Indian chiefs, and they have this professional image that they're already doing well in everything they do. You're the number 1 person that needs to swallow the humble pill, because you're not the only person that's having these challenges. Everybody universally has some financial challenge in their life at some point in time. And if you don't want to compound it to make it worse, you should be transparent. And here's what you should know. Just like you, there are privacy, privilege, confidentiality, best practices that these professionals have to apply, that they're not going to put your information out in the street. And they're not going to be looking down on you or judging you. So that transparency is going to help. And here's the thing you'll find out, Nick. Most of the time, your situation is not as bad as it appears to be. Because that's when the fear, evidence, false evidence appear real. A lot of times, most people are doing the right things. They just don't have them structured properly. And since they have that flexibility, in the 3-year window as a small business, your accountant, your attorney, your financial planner can come and clean up things for you. And if you happen to have invested in some real estate, you happen to have invested in a business and had some legitimate customary and ordinary expenses based on the SIC codes, a lot of that stuff becomes a legitimate tax write-off that now you can categorize it. See, I'm old school. I used to have a folder for every individual service product that we bought in our business and in our professional personal life, that when I sat down with my first time, I said, oh man, you done all the work for me, bro. Painstakingly as it was, but now guess what? That's your QuickBooks. That's your Peachtree. That's your Intuit, all them other, Google, whatever. That's what that is. And you just download that stuff. It takes time. And again, I'm guilty of this because nobody likes to do that. I don't like doing it. I have to do it. I'm knocking on some stuff right now. Again, nobody likes to do it, but once you get it done, you get empowered. And here's the best part about it, Nick. You start understanding and learning for yourself what this is all about and how it works, and how the advantages that you didn't see that you had were advantages that you were leaving money on the table. And now if you've done that transparency, now your accountant, your attorney, your financial planner, they'll now tell you, hey man, here's what Q1 2022 looks like. Here's what Q2 looks like. And now we don't have to spend as much time with you because we got everything structured and you can just do. And again, I'm saying this to myself as well, because anytime you start a new business, it's very unlikely, unless you can have everybody on the team and pay them exactly what they were, that you have everything right. Corporations, they delay their tax filings. And here's another thing. If you sat down with the accountant and they just took a cursory look at your stuff, because they experience, just like a doctor, they can tell, oh man, you know what? You probably not going to pay hardly any taxes over here, over there. So this is what we can do for you and buy you a little bit more time. Now, I'm not saying that's always going to be the situation. And then you go back to the basics. What's the basic? Man, that I got that emergency fund. If I have a business and I have in my bylaws under Cafe Rule 125, the legitimate write-offs as an executive of my business, a lot of that stuff that you were doing on those apps falls right into legitimate write-offs. So now I'm lining up that stuff. And now those 3 people who I'm sitting down with, worst case scenario, every 90 days, their job gets easier the more revenue you make, because now it's just a minor of just a application and a data entry point. But the tough part has to be done. So now when I'm looking at, wow, man, electricity went up 15%. New cars went up 9%. Furniture, 12%. You know, beef, 18%. Hotels, 18%. Used cars, 34%. If I have to get one, I'm like, oh man, you know what? It's better for me to spend this money on these than give it directly to Uncle Sam. Because you have a strategy in place. So now I'm going to take inventory of every app that I got that's just collecting cash. And since they're going to have access to it beginning in 2022, you still got the rest of 2021 that they don't have access to. So get your shit in order. Don't be spending all this time getting ready for Black Friday, Cyber Monday. Spend this time right now for small business planning. Professional tax protection planning for professional incomes and middle class tax planning. Because a lot of those things, Nick, you'll be able to put in your emergency fund, fully fund your Roth, your custodial Roth, your distributions, and any profit that's left. If you set it up properly, 80,000 or less, 0 taxes you pay. Then you can take advantage of the tax credit to actually pay your child up to $12,600 tax-free at the kiddie tax strategy. So here's all the entrepreneurs should be maximizing that. So I don't understand it really, why people don't sit down. Well, I understand it because, oh man, I gotta get them $2,500. Okay, but if you gave them $2,500 and they just got you $15,000 in tax write-offs, did you win or did you win? But that same person will go out and spend $2,500 on a trip, some shoes, a car, shoot some lavish videos, pop some bottles, because that's part of that lifestyle. But that smart person would say, okay, well, let me just spread this out and just do it mathematically. Okay, if I invest $2,500 and I spread that out over 12 months, man, that's only $200 a month. If I spread that over 30 days, oh man, that ain't nothing but a couple of dollars. Hey, well, hold up. So if I invested $2,500 over 12 months, that's $208. Then I invest that over 30. Dude, that's $6.90 a day. And guess what? It's 100% tax write-off. So now you didn't back that up. Now you'll put that intent acquisition, what I talk about in the class, in the Family Finance 101 class. I said people spend money on what they want, not what they need. They make impulse purchases. What I talked about yesterday, the average child from 0 to 21 has been programmed by over 2 million commercials to buy what? Stuff. To buy stuff. So I can go up here now and I can say, wow, wait, hold up. I can accelerate down my mortgage right now. I can get a 2% interest rate, 2.5, and I can make the same payment I was making before on my principal on a 30 and knock off 17 years. So I get excited about this stuff because now I got an active plan in place. And now guess what? Because money is cheap right now, I can pay off my debt quicker at a lower rate. So prior to 2019, when interest rates were still, 6%, and then when they came down to this 2%, if I'm still in that loan, I could take that 4% margin. And if I didn't have a problem making that payment, take that and knock it down on the principal, accelerate down my debt, get debt free with this cheap money. So now that's why I'll look at structurally planning a refinance, structurally planning a home equity line of credit. Now you become the arbiter. But again, where does all this start? It started at taking inventory, putting your pride, your ego, your image aside and say, you know what? Look right in the mirror. I got a problem. I got a little bit over my skis, but you know what? No need to panic. Let me find the right professionals. Let me find the right professionals to vet those professionals, and then let me be transparent with them and take complete inventory of everything that's going on in my financial construct. Now let's open up the new tax laws, and rest assured, 9 out of 10 times, you're going to find that there's going to be a benefit for you. And guess what? If there's not a benefit, guess what the major benefit long-term is? You're going to get your stuff right this time, and you're never going to go back. And now you're going to be more astute, more knowledgeable, because you got one key thing that they can't teach you in school: experience. So now I'm going to get that new tax code book every year. And I'm going to focus on being laser focused and look at the stuff only pertaining to me. Not everybody I see on these mediums, because everybody's program ain't the same. That's why we say our program is creating financial independence, one solution at a time. And if you noticed on the people to give us testimonials, what's the first thing they say? Man, DJ brings a one-to-one solution to us, not this, bagged cookie cutter and put everybody in the same box, because it's not the same way for everybody. There's some similarities, some parallels, but most time your situation is unique. But I can show you individually where you are, because again, I have you talking to James Lane, our CPA. I have you talking to Melvin Hobson, our registered investment advisor of 18 years, working with millions of dollars. SPHR, which is the highest certification you get as an HR executive who actually consults with Fortune 1000 companies to teach them how to do HR practices for their employees. You think he might know something about business for the middle class. You think that James Lane, CPA Jr., 30 years as a CPA, having worked at ExxonMobil, doing billion-dollar tax returns, never came up short on one audit. Worked for KPMG as a consultant for real small businesses that were categorized at 40, 50, 60, $100 million businesses. Oh, and by the way, does it for small mom and pop shops making $500,000 to $5 million. He might know something about the tax laws, corporate structure, what's more viable, LLC, S Corp, C Corp, given your tax situation, your state, and your federal situation. Oh, and by the way, Lisa K. Shebar on the legal side might know something about the legality of your brand, your trademark, your litigation concerns. And now you bring them all together, and now you got your business coach, 20 years in the game, 12 businesses started, 8 of them flat out failed, but they're not failures because I learned from them, Nick. Those 4 that did become successful and are working well, I can now bring these all together and synthesize it for you and articulate to the CPA what he needs to know from business perspective, that it makes it better when he sits down with you. Because what have we done? We put you on a budget. We had you fill out a survey. We got you prepped for that consultation with the CPA instead of you just getting a bag with a whole bunch of receipts in it and running to him and expecting him to do book filing. Now you talk to Melvin, and Melvin now broke down if you got a self-directed IRA, a 401k, a Roth, a custodial Roth, and tell you how the parameters work. Then he can show you the advantages of your insurances. Save you time and money. Now you put all those people together in the 7 spheres of money. Now you're better off than 98% of the people in the middle class. But see, Nick, this ain't sexy because you're looking at, well, DJ, you ain't taught me how to buy no property. You ain't taught me how to make no $1,000 a day. You just showed me defensive mechanism. Well, let me tell you something, boss. If you got $60,000 worth of credit card debt, you got $80,000 worth of student loan debt, and you're servicing this debt 7% on one side and 15% on another, and I just showed you how to get out. Let's do the math here, buddy. Let's do the math here. Okay. $60,000, credit card debt, 15%. Annual services, $9,000, bro. Now, you're probably not going to pay $9,000 because you're probably, paying a little bit more than the minimum. So every year, $4,500 in fucking interest. So we come together and help you knock that. Now, before you met us, you had this debt. Most people who I talk to, they've had this debt 5 years at the minimum. Most of them, Nick, 10 years. So you've been servicing that kind of debt for 10 years? Well, let's see how much. So you done gave the man $45,000 of your freaking money, and you're just paying juice. So I beg to offer my deference to you that did I not make you some money? I think I did. And then I show you the tax law because you started a small business You might not have the right structure and everything, but because you had 3 years to get your shit in order, we actually can go back and appeal some of your stuff. Now we drop your adjustable gross income to lower, and you drop down to a lower tax bracket. And now if your taxes weren't filed correctly and you didn't have those structures set up properly, Roth, 401k, 401, 401a, 403b, 457, proper insurances through your CAFE Rule 125, IRS code, that these are write-offs for you if you put them in your bylaws, we now can go back to your tax return 3 years. So I can go back, Nick, to 2018. If you didn't file your taxes right and overpaid, and we did an audit, a forensic audit, Nick, we can go back and appeal and bring that money right back into your coffers. Oh, and get this. Oh, this is what I really love. So we pull that money back in, and I give you 3 guesses, and the first 2 don't count. I can guarantee you this, because we've done it over and over and over again. Now we pull that money back, and you were not fully funding your Roth. You were not fully funding your 401k, your 457 deferred comp, your custodial Roth, because your child is doing a little bit of work for you. I can now take that money, Nick, and deposit it in those accounts for you. Check this out, Nick. All the way up, fast forward to tax day, April 15th or April 17th of 2022. That's what I just said. I can catch you up and put that money from the future into your past accounts, and you get credit for it. But we out here buying these simp courses. Little basic ass courses that you would see in elementary class. Because guess what? I was 60 large in debt. 525 credit score. Turned down not once, but twice. And I just read 1 chapter of a financial book on personal credit, got my stuff right, and then I went out and recruited and hired the best of the best to put this curriculum together for you so that you now can download into it and get your shit right as rain. Real talk. So that's where you should be. So first thing is, I don't panic. Second thing is, be real with myself. Third thing is, find those 3 professionals. You're going to be in a reactionary mode first, because if you ain't done nothing, that's reactionary. And then the most important piece, I'm going to be what? Transparent with them. And after I get that all done, that pain's going to go away. And what was painful is now going to become a benefit for you in your future. And now you get together with them every 90 days. And now you start systematically crawl, walk, run to success. And now you start paying down that debt, taking that debt you were paying down, putting it into those proper vehicles. And now you start investing and buy yourself 1 a year, some type of passive asset, be it real estate, business, dividend stocks, etc. And if you're your age, Nick, 30, you do that over 20 years, you're going to be a multimillionaire. Oh, I hear you. Man, I'm 50 years of age. Okay. You got your health. You got a little bit of stuff put in proper place. Guess what? 10 years. If you can fully fund that Roth, that 401k, that SEP, you will have $500,000. This board right behind me, it says invest $300 a month, earn $250,000 to $500,000 in 10 to 20 years based on the rule of 72. And where you get that at? Right in this little basic course, Family Finance 101. And see, it ain't basic because this is 20 plus years with 125 years of expertise brought to you from every expert in the 7 spheres of money. And then we synthesize it to your actual situation. Quiet as it kept. Guess what? Only about 2-3% of people don't do it because 90% of them, they still, oh man, I'm going to go out here and I'm going to be a big baller shot caller. Go right ahead. Enjoy yourself. And you'll be stressed out and you'll never embrace that pom-pom lifestyle. And that pom-pom lifestyle is for everybody. There's nobody special. You just haven't figured out the science behind it. You haven't gotten yourself the right team. And the most importantly, you haven't swallowed that humility pill. So kudos to you, Nick. You came in, what, you've been knowing me 3 years now, I think, somewhere around there. Boom, boom, got your shit right as rain. These people who bring these testimonials, they're not making this shit up. We doing it. And here, man, here's the best part. We interviewing a person right now, didn't even know. A mom that partake in our program, got the nuggets, applied them, and was like, yeah, my mom's bought your program. She got your book. What? Yeah, it works. No kidding. Man, that's awesome. I mean, I'm fired up. But typically it'll be the opposite story. Oh man, got your stuff. It was some BS. You were taking people's money. No, baby. 20 years in the game, doing it right. So yes, the tax laws are changing. Guess what? Here's the tip. They change every freaking year. They may not have drastic changes because when you have new people in office, they got to move out the other person's team and bring their team in. Simple sports analogy. Have you not seen it before? Is it ever do you see a new head coach take over a team unless it's mid-season or something that they keep the same staff? No, they bring their own crew in. Then they're going to try to do something drastic to let you know they players. They can see they make a difference. Now, this cat here, he's servicing a whole different, set of rules and a whole different, regime. And they really about taking us down. And now it's a wake-up call. And I'm going to toss it over to you. Man, dude, this is just like the Squid Game. People playing games to relieve all their financial problems. And here's again where history always repeats itself. 350 million people in the United States, 300 something tax returns that are done for 20 years, Nick. The numbers have not changed, maybe a little bit. Yep, more millionaires than ever before, more billionaires, but the middle class, 20% of people in America, individuals, only make 60 grand. The average black male only makes about $42,000 a year.
Mm-hmm.
Matter of fact, they went back to the 80s and the 70s, and actually when you do the cost of living adjustment, they're actually making less now than they were making back then, bro.
Wow.
Hey, you don't have to take my word for it. Like I talked about last night, go read the books yourself. Make it meaningful, measurable, and manageable based on your interpretation of the tax laws and the tax returns, and come back and have a conversation with me. Talk about the adjusted cost of living. They got a study to show the most expensive cities to live in and what the hourly rate is to just be at the just above the poverty level, dude. In California, you need to be making like $45 an hour. In Texas, it's $24 an hour. That used to be good money. That used to be good money, bro.
Wow.
That's why you got people right now doing the West Coast, East Coast to Southwest migration right now. Oh, my house in Inglewood, LA, the hood, $750,000 in a gang-related area. I'm not saying it all is. Oh man, I can come down to Austin, Texas, and I can get a castle for that amount of money and pay no state taxes. I don't care how great the weather is out there, bro. Peace of mind, plenty of money. I'm coming to Texas. Or I'm going to Florida. In the East Coast, Erica just said it. She's up in Lake Placid. Lady got to pay for a restaurant, $800,000, and her son moved to Austin, Texas, and she found out she can get a house for one half the price she's paying out there in Austin, Texas. San Antonio. She was like, oh, I didn't know I could do that. Guess what? You got to broaden your horizons, baby. So I done went on this you know, I don't know what you call it, soliloquy, whatever. But hey, man, it's real, man. So
Yeah.
that's all I got.
Hey.
You know, if you want to get right, hey, get with us. Check out the fruit on the tree. I got a LinkedIn profile. You know, State of Illinois Attorney General's office didn't have me come in and train in their young attorneys because I didn't know what I knew. Proven. State of Michigan didn't have me come in there and teach about predatory lending, prevention of it, if I didn't know what the hell I was doing. Montgomery Regional Airport in Alabama didn't have me come in and do financial education, Melvin and myself included, and teach them about finances and proper planning. The YMCA, RC Cola, Fannie Mae Candy, E-Women Network. Look these cats up. The Federal Reserve, Houston Federal Credit Union, third largest credit union in Houston, was a client of mine for 3+ years. Must be doing something right.
Yeah. Must be.
Hey, winners. Get it done, baby.
That's right. That's right. That's right. Hey, man. Listen, I say you inform the people, you know, it better than any article, any analyst on cable news about what's going on right now and what it means for these business owners. And I think you put a lot of folks' minds at ease, you know, because the news media can make you feel like the sky is falling for you to start panicking. So I think you put a lot of folks' minds at ease, you know, ease some of their fears about what's going on, you know, gave them some tangible first steps to take, and even offer them some resources. You know, of course, yeah, you can go out and find these people and vet these people to put on your team, but you know, you can also make it easier for yourself and get with the team that's already established, that already has the track record, you know. So I mean, the choice is up to you, but you know the help is there. You know, the help is there. You know, so you know, I think you gave them more than enough. You know, their cups should be overflowing right now, and they got some things that they can start working on, you know, as soon as they get off of this stream, you know, to get themselves right, you know, for this last, you know, for this fourth quarter of 2021, you know. And if you do choose to go with our team, the information is right there in the link. And as soon as we get off here in the next few seconds, we're gonna run that video so we can reiterate what we have to offer for you all. You know, so that, you know, that's what it is. This is Nick's Knowledge and Notions NQ Science Series, brought to you by the 7 Spheres of Money. And of course, you like what you heard, so go ahead and like the video if you haven't already. And then when you share the video, when you share with all your folks, all of your network, your friends and your family, and you share it with them and they watch it, you know, tell them to go ahead and like it and share with somebody else. And while they're at it, go ahead and subscribe so we can spread this message to the masses. You know, spread this message of the pom-pom lifestyle, spread this message of financial freedom, and you know, spread this message of real talk coming from real professionals and real Black men and real Black women. So, you know, catch us again, same time, same place. Nick's Knowledge and Notions. And as always, we wish you a pom-pom lifestyle that is plenty of money, peace of mind, and we invite you to come join us on the beaches of the World Club. One of the most beautiful beaches in the world right there, Destin, Florida. One of DJ's favorite places to go.
Man, one of the best kept secrets in the world, bro. Real
Yes,
talk.
yes. You can come join us there, or any other beach. and if your idea of a beach is a sand or water, that's fine too. You know, because your beach is wherever you find your peace of mind and your personal freedom. That is what a beach represents. So we'll see you next time on Nick's Knowledge and Notions NQ Science Series. Take care. Peace.
Hi, I'm DJ the Money Coach. Don't touch that dial. You want to become financially independent? You want to have consumer debt freedom? You want to have passive income, learn how to build a business, acquire real estate, and achieve the lifestyle you deserve in 2021? Well, hit that link below right now. We've worked with over 20,000 people in the past 2 decades, helping them become consumer debt free, increase their credit scores by 30 to 60 points in 30 days or less, and help them acquire businesses through real estate, taxes, and a network of experts just like me. So you'll get a complete 3-hour, 18-module course called Family Finance 101 that'll teach you A to Z how to become consumer debt free, credit worthy, and it puts you in position to become a certified entrepreneur. We'll also give you a complimentary consultation with me that's a $500 value. Why would you want to do that? Because I have already achieved that, and I can help you achieve your American dream in 2021. Hit the link below, get the free webinar and the complimentary consultation, and I'll see you soon and wish you a pom-pom lifestyle that's plenty of money and peace of mind. Come join us.
I'm with Great Lakes Property Management Group, and I just wanted today to give a testimonial on the ABCs of Wealth by Dale Duransberg. I call him DJ. Just wanted to say, as I was reading this, I was expecting something a little different. I thought it was going to be all nuts and bolts, because that's the kind of guy Dale is. Dale is all about the numbers, the numbers, the numbers. Well, this book turned out to be both a little bit of nuts and bolts, but a lot of motivation. So if you're someone that's on the fence, looking to get started, just trying to figure out how to do something or what to do, get motivated to get off that couch, I recommend you pick up this book. It's going to get you to move. The motivation, the nuggets that are in here is going to definitely help you in all things that you do in life. Good job, Dale. Love you, man.
Hi, I'm Markel. I work as a long-term forecast analyst for Disney Streaming. I met Dale at Erica's Classic Climb Tour in Atlanta and signed up for his services. Prior to that, I'd done a lot of research on my own to try to improve my finances, and I made some progress, but I was really stagnant and just not sure what to do next. So I was a bit apprehensive about sharing all my financial information and then having a discussion about it. But Dale made me feel very comfortable. He wasn't judgmental, and it was just my starting point. He explained to me how to get rid of my student loans, my old student loans that I thought were just insurmountable. He helped me with strategies to reduce my expenses that don't make me feel like I'm sacrificing anything. And it's not the same information that you find like rehashed and repackaged for the internet. It's personalized advice. It considers your current situation, where you are, your goals, um, and your level of comfort. We put together a realistic plan of things that I can do immediately, things over the next few months, the next year, and then long term. I feel very optimistic and excited about my plan and that things are clear for me. And it also is motivating me to try to find more income to get to my goals even faster. Dale is very knowledgeable, very sharp. He was able to answer all of my questions, and anything that he felt like was out of his scope, he has like a network of people, professionals who are vetted that he uses himself and he can refer you to. I appreciate that he offers this service and like shares all of his real world knowledge and experience he's gained over many years in the business. I think that that's very valuable and not so easy to find. Dale is very passionate about what he does, and I highly recommend working with him.
Hello, my name is Tim from Southern California. Just want to give a testimony for DJ the Money Coach. Just had a recent consultation with him over the face-to-face Zoom call and gave me some valuable insight as far as financially wise and how to move forward with my life. And we'll recommend him to anybody and everybody if they want to improve their life financially as well. So definitely, again, nothing but great services and feedback. What I've received thus far from DJ the Money Coach, and I advise anybody and everybody about his services. Thank you.